Yo, 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 welcome back to the channel. Oh man, I just tried to do like short form style, like YouTube shorts for algorithm purposes, but the other guys, but I know that algo is listening to me, so I don't want to offend it. But yeah, I want to try and take the content to another level, reach more people. I did this tweet thread earlier where I walk through the charts that I'm watching. So I'm going to use that as like kind of like a basic guide essentially to this video where I am going to just break down quickly the charts that I'm looking at, the things that I'm watching more specifically, and where I would be long, where I would be short, and my macro bias. So let's take a look. First thing, I didn't talk about SPY in the thread, and we'll get into why in a second. I think that SPY obviously is really important to be looking at, but I think that there's a broader index that you can be looking at, and the number one thing that I'm watching is QQQ right now. QQQ essentially is the same thing as SPY, but it's just more focused on tech-like companies, and so it has a lot more. Like, to me, I feel like tech companies are the ones that are in the weakest position right now, looking across the market, looking at charts. And I also think that if you look at the 2010s relatively, tech companies were the ones that got the most hype and the most funding, so they do have the potential of being the most overvalued. See Tesla, for an example, right? And so we've seen a correction in Tesla already. So looking at QQQ, this is the weekly chart, and I'm not sure if I brought this up on YouTube already or not, but you have this macro uptrend that's from the bottom of the '08 collapse that taps here on the COVID 2020 bottom as well. And then you have the secondary uptrend here that is from the bottom in 2018 to the bottom in COVID. So I'm expecting that QQQ by the summer, July-ish, should be trading down to this range here. And this also correlates with a Fibonacci. Here, your 618 is the $235 level. So I am certainly expecting that in the relative, near term, the coming weeks to months, that you will see QQQ. And it could be a pretty aggressive drop initially if you end up losing this trend. And you get pressed down even harder than what I'm expecting, and then you trade within this range. Now, if you lose this uptrend, then things will get very ugly very fast. We would pull back this Fibonacci to try and look for other levels of potential support, as well as find correlations, such as this $187 level that I'm seeing here on this 0.5 Fibonacci, which would be like really key levels of support, right? So that's how we would look at QQQ. And the reason that I think that that's more important to be watching is just because I think that if tech overall gets smashed in that way, it's going to have a huge implication on the S&P 500, and that's where you're going to see really big moves come out of the S&P. Also, I've been watching Apple very closely lately. Apple is at a critical moment, and everybody knows, it's kind of like a meme, right? Apple is like like every earnings report or something, like Apple is like carrying the shit out of S&P, right? So looking at this macro uptrend, this one dates all the way back to 2003, okay? And since then, you've had this insane rally for Apple. You didn't have another touch on it until 2018, okay? So this is like, very distributive structure back here. You come back, you test 2018, you basically double bottom it or triple bottom it, really. And by the time you get to the COVID drop in 2020, and since then you've kind of just fluffed along here. You showed relative weakness up here, and this is after splits or whatever, but to the 180, 170-ish level, obviously looking really triple toppy here. And then since then you've been in a more aggressive downtrend here, pressing down, and then so now if you're looking at this as a distributive structure, which I personally am, right, locally here, and this is the weekly chart, you have basically your sign of weakness down here for the entire chart was in June, okay? June was the bottom. It was about $129. And today, you broke through, and you broke through aggressively, okay? You pressed right through this $129 level, and you got all the way down to 126 here. Let me put that trend line back up. And this I'm not going to sit here and try and figure out whether or not we're actually below this downtrend, this uptrend or not. This is the macro one, remember, from 2003. Because the time frame changes the angle of the trend. You get after hours and pre-market hours that are added into it. So it does get a little dicey, whatever. But what I'm saying is we are clearly at a very critical moment here. Now, short term, I am expecting that Apple has some sort of recovery here and retest this 129 level before it continues to the downside, okay? But I will say that my bias is that you will see bearish continuation. And it might not even happen as I put here. What's really key to be watching is just to be watching this trend line. Because you could even climb up here, right, and then test this downtrend. Now, if you test this downtrend back here and you succeed through it, then you can have another rally. So like I'm not sitting, again, I've talked about things like this before. I'm not sitting there in puts like after you break through this downtrend. I'm like, okay, like the short thesis that I had is broken. Okay, so like always like try and contextualize. I know I don't always explain that sort of stuff fully, but try and contextualize that, because like if I'm saying, hey, if it breaks this downtrend, this uptrend, I'm very bearish. That means that if it maintains that uptrend, I no longer that, like, I don't have that bearish sentiment until it breaks it. Does that make sense? So anyway, I just wanted to explain that briefly because I sometimes I see some confusion when it comes to that. So this is certainly a possibility, but right now I am leaning to the bearish side. But you could even climb up here, come back for a retest of this this downtrend here, and then get rejected down. Okay, so it can take some time. I'm not necessarily calling for this like this week, but I do think that eventually the likelihood is that this downtrend here does hold, and then you do get pressed down to $80-ish on Apple, which is going to be a big deal. And that should be over the course of the next year, right? So that is another 35% down on Apple, which would be a total from all-time highs of about 55% losses, okay, for the biggest, baddest market cap in the world. All right, so kind of a big deal. That's what we're watching, and it can get worse than that. That's just kind of my initial, like my first kind of target. Like if you're looking at things like this, okay, like you see this big crazy gap up here in 2020. So what this means is there's basically no support from here, okay, from $107. If you break down below $107, you can essentially just go to $96, like almost instantaneously. Okay, so like that's just things to look for. All right, let's look at Tesla, and then we'll get into some crypto stuff. Tesla, obviously a big winner for us. We've been very bearish on Tesla for quite a while now. And this thing absolutely jumped off a cliff in the past month. We were really watching it up here around this $200 area. I honestly didn't expect it to be this bad this fast. I wish that I would have been able to get more position here. But overall, what I'm looking for on Tesla is basically two things, okay? You have this short-term, like, really aggressive downtrend here in yellow. I see you rounding out here a little bit, okay? Like, I am seeing that, like, bears are slowing down here. They've been partying real hard lately. So I do think that a little relief comes, profit taking from bears, but is the likelihood, in my opinion, because, like, whoa, dude, we can't do this forever, can we? So I'm expecting the likelihood to be that you do break this downtrend, and I think that it's actually very plausible that you could have a rally up to the $145 to $160 range. Actually, in like the next like week or so. So I think that that's definitely a possibility. Again, don't hear what I'm not saying here. If you do not break this downtrend, then things can get very, very ugly. And it's actually realistic for you to see $65. This thing is at a major, what I'm telling you is, this thing is at a major decision point right now, okay? So that's a really big key takeaway to be taking from Tesla. I know that sounds crazy. I know it sounds crazy, $65. But remember, okay, I was calling for $50 when it was $200, and everybody thought that I was crazy. And I mean, since then, literally in like 2 weeks, at its peak, it lost 50% of its value. Like from the call time, it got down to like almost $100 from when I was calling for $200 in like 2 weeks. Okay, so this thing is definitely like, and the reason is, again, once you break through this level here, this $90 level, and this is a composite man setup, okay? You see all this gappy, blank shit back here? There's no support. There's no support for this rally. So your next level is basically this like $69, $65 kind of range once you break through 90, okay? So it can get really crazy. What I'm pretty much expecting, like if I had to be biased and give like a likelihood, I'm just gonna play it how it comes to me. I was kind of looking for a move. Whoa, excuse me, that thing snuck up on me. I was looking for a move down to like $98-ish to $103 before you had this like big move up. So that is something to look out for. Basically what I'm going to be doing is, I'm going to be looking for either the downtrend break. If it's above the downtrend, I'll play it to the long side. Or looking for that bottom E kind of move at around this like liquidity range right here, okay? So let me put it here. So you do have some support here from this like $98-ish level to 103. You really should like survive this short term at least. But I do ultimately expect bearish continuation in the long term. I'm looking at like the next 6 months is like where I'm targeting timelines for like a lot more bearish price action because of the underlyings within the S&P 500. I really think that the big players, you haven't really seen the big players get crushed, like Amazon, Apple, Microsoft, like those sorts of guys. Yes, of course, they've already seen retracement, but I think that they haven't really gotten crushed in the way, like, you know, Netflix has seen severe adjustment. Tesla has now seen a severe adjustment in valuation. Those bigger guys haven't really seen that, and I think that that's kind of like the last, you know, like capitulation sort of event is gonna be sometime in the next 6 months. 3 to 6 months is where I'm at with it right now. Obviously, it can extend. Like you saw that Apple chart, and Apple's so big, man. There's so much value that's wrapped up in this thing. And like we said, you know, like here, if you kind of squeeze into this here and you don't move fast enough, it'll take you until August to get to $105 on this thing. You know, and it would take you, like, this is more fair valuation, $80-ish. It would take you until next year because it's so big. It's so hard to move Apple the way that you can move, like, compared to Tesla, because Tesla is just like, it was so overvalued. I mean, it was $1.3 trillion valuation. Man, what? Like, what? Who was buying that? But anyway, we don't talk about fundamentals. Anyway, all right, let's look at some crypto things, and then we'll get out of here. This is taking longer than I thought it would, 13 minutes. It's okay. Doge, I'm loving Doge right now, dude. I'm so ready. Dude, if you have been following on Twitter... dude, this might be my most insane call ever, but when it was up here trading in this 10 cent to 11 cent range, I was saying this thing is going to go to 6 cents, below 6 cents, possibly, by New Year's. And I was saying that since like the beginning of December. And here we are now. We're all the way down to 7 cents. And this thing is hanging on a cliff, looking redistributive, looking like it's going to play out exactly how we planned it, man. And just to tell you how we planned it, how did we get to this conclusion? It's really simple, okay? Algos create these trends, and like big players support or resist these trends. And so what that creates is diagonal liquidity, right? So big players want to either hold or get the trend to be rejected, or if they are trying to hold a trend and that trend gets broken, then they get out. That's what causes big flushes when you see those trend lines get broken, right? But also it can create a magnet type effect when you see these trend lines correlate with each other. So you see this macro downtrend here, like the all-time downtrend. You have this support trend back here with a bunch of touches on it, right? Some rejections back here, rejection, support. This is where you really knew that you were going to get a big rally here when you broke these two lines. And then you have this short-term support trend, right? So this area right here now is acting like a magnet. I mean, and it's literally been sucking price down like a vacuum to it. I mean, it's really something to see. It's very fun to watch. It's also very fun to be short in. Few steak dinners, I suppose. So basically, look, I mean, this thing looks like McDonald's arches back here. I think that over the course of the next day or so, you're gonna see big major retracement move down here into the low sixes, maybe even sneak off into the high fives, and then from there, I'm gonna be personally. You do whatever you do. I'm personally gonna be empty. No longer gonna have any position in Doge. And to be honest with you, I think crypto took a big dump already. I think that it's going to take another big one in the coming days. Don't really know what the catalyst is. That's what leads me into Solana. I'm currently short Solana. Been short since back here when it was like $11 or something. Now it's down to like $9.75. This chart looks horrendous. Okay, I love this chart in so many terrible ways. This thing is just a big old nasty ugly distribution. It's just redistributing. It doesn't even pretend like anybody's accumulating it that has any sort of pocketbook that would be able to control the price in that way. And I mean, this is a very easy, simple read to me. Not financial advice, obviously, but this thing is just redistributing again. You have this big, archy, nasty, high-hanging kind of look. You've already broken through the support, seeing $8.46, probably around the same time that Doge. There's going to be some sort of news or something that breaks. Push the price down, $8.46. I might hold on to some runners and have a stop to see if it'll dip down to $7.08 or so. That would be really cool. Woohoo! But eventually, I do think that this thing does, and probably crypto in general, and this thing is like so bad that it might actually be like the catalyst for crypto at some point. Like, because this chart is just terrible. This is like one of the worst charts I've ever seen. I love this chart, and it's so bad. But yeah, so I'm definitely seeing like 425 down here to like, 494 in a longer term sort of basis, right? So like maybe lower leverage, something that I know I can hold on to for a little bit longer if you have like, any sort of like relief rally that's kind of crazy. Like I don't want to like sit there in like 5x margin and see that sort of loss, whatever. But I think that like eventually this is like the thing. I don't know. I mean, this thing looks like it can go to like zero. Like I hate, this is so bad. It's so bad. So bad. All right. I've been thinking about this. I'm going to do an AMC thing. I'm not going to broadcast it. If you guys broadcast it, whatever. This is for the people who have stuck with me, support me. And I know that like I kind of ghosted on this thing or whatever, but it was because I didn't want to I didn't want to do the witch hunt anymore. Like, because anytime that you go bearish on this thing, then like everybody loses their minds, calls you names or whatever, and like all my, my name is out there and everything like that. And like there have just been some crazy times, you know what I'm saying? Like there's some crazy shit. There's crazy people in the world. If my chart would ever load. But yeah, after that last like rally, when it ran up to like $30 or something right before the ape launch, whenever that rally failed, that was like my last video. When that rally failed, I was very bearish. I did not like anything about it. Oh my goodness, my chart's really not going to load, so I gotta sit here and awkwardly. Okay, cool. Yeah. Well, wow, you had a really ugly day to day. I didn't even realize. I don't really watch AMC like that anymore. But yeah, so let me see where this line is. Log. Yeah, I am. Why can I not? I guess it's here. I guess this is it. We're so far below it now that it's hard to. And then there is. Let's see. It'll come to me. It'll come to me. Give me some time here since you're here late in the video. Basically, what I'm seeing here, I think, is boop. Yeah. No, that wasn't it. I think, yeah, this is kind of what I'm thinking. Is this it? Yeah, this is it. This is it right here. Sorry. All right, so basically, similar concept to what we talked about before. Again, this isn't me trying to like shill or whatever. But basically, kind of what I'm looking for on this thing, I did tweet and say, like this line. I was like, you do not want to lose this red line. You broke it. You had this like rocket back above it, and now you've refailed it. And so I think that this thing is definitely, in my opinion, not financial advice, going to $2.57. You could extend lower. I do see this like gap back here, which might act as a magnet around this region. So like the look would be like this sort of here, and then that would be your like next potential upside thing. But this descending support trend being broken is really bad news. And obviously you're already seeing the repercussions of this. Since breaking, you're already down 20%, and I am expecting a lot more, obviously. So basically what I'm projecting here is by the time it's all said and done, as much as 50% from the break. And that my timeline on this, and again, this correlates with the broader market being very bearish. My timeline on this is like April. So again, the timeline's not that crazy because it's like it correlates with the broader market being extremely weak. I was never the type of person that thought that a bear market would be good for AMC. Actually, I repeatedly spoke out against that sort of narrative many times. Yeah, so that's basically where I'm at with AMC. I know Ape has had a rally. I honestly think that like Ape is like it's had this like big crazy rally, which is good, but it has this like this thing about it where it always has these rallies, and it's like they're doing offerings, and then they're pumping the price of it so that then they can dump it and then just like continue a new bear trend. We'll see if that changes, but that seems to be like the Like they're just like raising funding short term sort of thing. I don't really know. I'm not really a fundamental guy, so I'm not really going to talk about that. Maybe like look for somebody who wants to talk about that. But yeah, I mean, you're seeing here after that big old pump, it's down 24% on the day, and even worse in after hours, like really bad. So not really. I'm not bullish personally on it. I'm not bullish. I mean, you see, have I been? Did I say one bullish thing in this entire video? Oh, Tesla. I did say that Tesla could have like a rocket, uh, which is funny because I've been like shitting all over Tesla for like whatever. I do still like I am still very bearish on Tesla long term. Like I still am seeing like crazy, what the fuck, $50, $25 even on Tesla. So, but you know, relief rallies. It's not just gonna like go straight down. I mean, that would be cool. I would enjoy it thoroughly. That would be very fun. If like by February it was down here, so like $32, but like this trajectory, this trend is unsustainable, in my opinion. Like I don't think it's realistic to expect, but who knows? At this rate, I really didn't think it would drop 50% in like 2 weeks either. So, what the fuck do I know? But yeah. So that's basically the video. I know I said it would be shorter, but geez, dude, really long video, 26 minutes. Hopefully you enjoyed. And until next time, I haven't sung in a long time. All right, first song is Wonderwall. That's what came to mind. I said maybe. That's a hard song to sing. It's hard to keep your key with this. You're gonna be the one that saves me. And after all, you're my wonder wall. I promise I'm not a shill. I'm just a guy. I'm just a normal guy. I analyze charts, and I'm a nerd, and that's it. You know, nobody pays me to do this. I make like, I think I'm down to like $100 a month on YouTube ad revenue, which is actually a hilarious amount of money. But yeah, so that's the video. Hopefully you enjoyed, and until next time, peace.